Is Russia the biggest influence now on global markets? Well, our chief equity strategist and economist, John Blank, thinks so from a certain perspective. He joins me now to clarify. So, John, you look at this from the geopolitical perspective. Was this obvious given the geopolitical situation between Russia and the Ukraine, or did you have to do some digging to arrive at this conclusion?
The Russian aggression in the Ukraine has been telegraphed since at least 2013 when they invaded the Crimea. And then what we're learning here is that, when you elect a democratic government in the Ukraine that has already lost the Crimea to a military invasion, they have 7 or 8 years to prepare for further invasions, and they're actually in better shape than people give them credit for. The other thing is to realize it's causing all the world to basically join the support of NATO, regardless of religion or size or anything other than maybe the Chinese, and that's another powerful global force. It's probably a geopolitical force. In the mixture right now is a macroeconomic, a spending force, which is much more short term, which is the China shutdowns and COVID. But at the end of the day, in terms of something that we're going to be talking about for at least another couple years, it's going to be the Ukraine invasion, and it's going to be the reconstruction effort. It's the story of NATO. It's the story of what happens to Putin in Russia. All of this will matter much longer and for much greater, and in greater, more meaningful way than the China shutdowns. But right now, from a macroeconomic lesson, China shutdowns matter most.
How does the release of major oil reserves play in here?
Well, it's evidence of the cooperation that's now in play in the United States and NATO, because the IEA, which is based in Europe, and in the United States strategic reserves are being cooperatively increased. This is also happening across Europe with natural gas, supplying, and with new cooperation with the Arab world for both oil and gas. So it is leading to a massive change in the supply and demand dynamics for the world economy for oil and gas. And that is the real story there.
And to clarify a bit more, this really has to do with the price of a fundamental product and its relationship to the earnings of companies that work with that product, namely oil and gas, as you said, right?
Right. That's it. That's all.
And so based on that, should investors be considering those oil and gas stocks right now?
Well, let's talk ExxonMobil. I looked in ExxonMobil, from a talk I gave earlier this week. It's at the highs that it saw, pre-COVID, but not actually higher. And the 2023 earnings for ExxonMobil, big global diversified oil and gas play, are actually somewhat lower for next year. So that can mean one of two things. That means the analysts are being too cautious and they will raise them, or it can mean they think the top is in on oil. But either or, I do not see open bullishness on the part of the analyst community, and you do not see the stock price, most importantly, the actual decisions in the marketplace about the value of ExxonMobil stock being anywhere but the top of the range, not above the range.
Let's delve into earnings a little bit deeper. We're in the Q1 2022 earnings season right now. Seems to have had a fairly solid start despite a few negative reports out there. We've already seen the big banks and the tech earnings, and based on what we've seen with this in relation to market action, John, do you expect earnings to trump other stock market influences for a while here?
Yes, I do, because here's my point. I wrote all last year at the start of the 2022 season, we should have been at 4350 on the S&P 500. This week we've been toggling around a low at the 4,200 level 4.5 months later. So what that tells me as a fair value, trained person is that there's some modest amount of value to buying the big stock indexes now versus back in January, which means that the underlying earnings have more support because the valuations are somewhat lower and you can get the look through to the earnings themselves. So it's been grinding. It's been somewhat painful. But particularly with a big pullback in the NASDAQ, you're getting to a level where, some of the valuations are starting to be sensible, which also means that the underlying earnings and revenue fundamentals start to matter.
So, what do you think of the big tech earnings and the big tech picture, especially seeing that the NASDAQ now flirting with bear market territory?
Well, looked into this for a TV show last night. I mean, you got to remember things like, Twitter are 40 billion in market cap. Things like Netflix now are 80 to 90 billion market cap. Things like Facebook are 500 billion market cap. Those are all the beaten up names. And then you've got the not beaten up names, the Googles, the Amazons, the Apples, and those big, and Microsoft, those big four. Those are all in the trillion to 2.5 trillion market cap range. So we're getting to a point where we have to reclassify, super big stocks versus those that are actually back to, human, standard big, large cap names. And that's really the difference here. But I would say across all of those names, it's very hard to see anything but a very mature company. There's no exciting growth, that's going to be emerge. Maybe under the underlyings in the cloud businesses at Amazon and the cloud businesses at Microsoft. But outside of that, I just don't see the growth, and those have to actually be broken out to be discussed. The Google numbers, Google is absolutely making a ton of money, and you just have to wonder what's going to happen from a regulatory perspective with that company.
You wrote about May 9th recently in a commentary. What's the significance of that date as it pertains to the global markets?
Yeah, this is important to understand. May 9th is not Independence Day in Russia. It's coming up as not Independence Day. What it is when they got away from the Nazis in Germany, when there was basically freedom for Russia from the Nazis. So the idea here is that May 9th represents a date where the Russian people have been sold that the Ukraine invasion is about denazification. So this idea of having something to say about the Ukraine in a positive way, maybe stopping, maybe ceasefiring or saying you've done enough, could be painted as a success for denazification on the day that Russia is known for getting rid of German Nazi, war efforts.
You're looking at a few overlooked stocks that have recently made it to the Zacks #1 list. Let's look at them. America Mobile, Uber Technologies, and NTT Data.
Yeah, let's talk AMV first. This is AMX. I'm sorry. This is a big wireless company in Mexico. Ticker AMX, trades about $20 a share. This thing has been a big run from about $12 a share in their pandemic lows. We're showing some really strong support for earnings both in 2022 and 2023. I'd probably wait on a pullback, but the chart looks good for American Mobile. And by the way, the growth score is A and the value score is B, so it's also not overvalued. Uber Technology is a very different story. Plunging from $60 a share down to, I got it here at 30. Lots of negative EPS numbers to show on my screen, period. There is literally, Terry, and we got to talk about this to people out there in the world. People like Uber, but you and I just look at earnings and they're negative, period. We just can get over why the stock's going down. There's nothing but negative earnings. Stay away from stocks like this that do not make money. It's real simple. NTT Data Corporation, this is the big telco of Japan. What's interesting here is there's absolutely no growth in their earnings. 88 cents a share sticks around, then they go to 90 or 99 cents a share next year versus Mexico. So the difference here is Japan, the GDP numbers never move around, and NTT Data doesn't move around. But what you also probably don't know is the yen is plummeting. So when you buy a stock like this, you're buying it in yen terms, which means people who are buying these stocks might think, the stock is plummeting, earnings are plummeting. No, it's the yen value of the stock that's plummeting. That's what you need to know, understand about NTT Data. Till that turns around, the #1 rank on the stock is worthless.
Okay. Our chief equity strategist and economist, John Blank, talking about influences on the global markets with us. And with John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.